because that's the other thing we analyze on KYC. What are the strengths, weaknesses, opportunities, and threats? Mahima, I'll start off with the strengths. Growth has never been a challenge for DMart. Of course, last 2-3 quarters barring, growth has been extremely strong for them. They've been able to continuously stand out in the marketplace, and that's a big strength for DMart. Very strong balance sheet given the kind of growth that they've clocked in past years. The other one is on pricing. The kind of scale that they have, nearly 350 plus stores, it allows them the bandwidth to price out competition as well as negotiate favorable terms with vendors. And that's another key strength. Any large organization is able to leverage on that size, and that's what DMart does very, very well. And those are the two big strengths, outside the fact, of course, that it's a Damani owned company and promoted company, and therefore you have a very strong backing with regard to both promoter as well as with regard to management. But outside of that, these are its key strengths. Weaknesses currently, you're seeing weak growth in the FMCG space where it predominantly has a large footprint, a large presence. And the other thing is that your growth has started to lag a little bit as a result of the overall industry trend as well as with regard to competition. So those are the couple of weaknesses which are starting to creep into the business. But why don't you take the opportunities and threats?
Right. So just to add a point to that lagging EBITDA growth, 9 out of 10 quarters, its EBITDA has lagged growth, which is kind of concerning, which is why, it's a part of weakness where, DMart is concerned.
Fair.
But, moving on to the opportunities, we're seeing that intense competitive pressure is coming in from quick commerce. The company can probably, leverage this as an opportunity because it has DMart ready, their warehouses, which they can, probably use in terms of quicker deliveries. They can expand in terms of quick commerce space via DMart Ready. Product expansion is one of the things that they can, have an advantage on. The third thing is that home delivery business now far exceeds the pickup point sales contribution. So DMart Ready is already contributing around 22% to its total revenue. And store expansion is another factor that could, play in favor of DMart because that will increase their overall throughput. Now, moving on to threats, quick commerce, as we all know, is kind of posing a threat on Avenue Supermarts. We saw in the first half of FY25 as to how the revenues were impacted. In terms of margin contraction, DMart, in order to compete with counters like Zomato and Swiggy giving high discounts, which is why the margin contraction is taking place. Their product mix share in terms of general merchandise and apparel, which is a high margin business, is going down, which is why the margins are being impacted, and hence negative operating leverage is taking place. So margins will continue to be under pressure going forward as well, which is why, this is one of the threats that the company has at present.